Most traditional New Mexico villages have great historic resources, but there's little economic incentive to rehabilitate them. They're a resource not just for cultural reasons, but for economic development. As originally enacted, the current state cultural properties tax credit is a credit against up to $50,000 in eligible expenses for a 50% state income tax credit. So for instance, if someone has foundation and wall stabilization, a new roof, stucco, whatever, and they spend $50,000, they'll get a $25,000 tax credit. And it can be used the year of completion to offset New Mexico state income tax owed. And if they don't use all of it, the remainder can be spread out over an additional 4 years. At the end of that period, if there's anything left, it's forfeited. The new cap would be $1 million in eligible expenses for a tax credit of approximately $285,000 at a sliding scale. The tax credit will be refundable. So if they don't use all the tax credit for that first tax year, what's left would be a refund. And this will enable people to finish projects sooner. If they're using the money in their pocket, often it can take 10 years to rehab a building. And with a refundable credit, it'll get poured right back in the project. They'll do the second phase of it. The business or businesses will open faster, and there'll be more economic benefit. And there'll be more rehabilitations. People will rehabilitate buildings for this greater tax incentive.
The building was designed initially as commercial space downstairs, residential upstairs. We want to do exactly that.
If the credit were refundable and actually became a tangible asset, then of course that would be rolled straight back into the construction process.
Right now, construction has been stalled for over a year because the next phase of the renovation, somewhere between $40,000, probably more like $60,000.
And it would probably double the speed of the completion.
Unless we're able to leverage the money and get the first floor rented, we can't generate enough income to do this phase. If it's refundable, now that money can now go into getting the second floor.
It's challenging for people in smaller communities because income levels are lower. It's harder for them to get financing. You know, having a refundable credit will enable someone with a small business or a house or whatever to do more work.
Yeah, I mean, it would be very nice to have a refundable credit. It would happen more quickly, and you know, I think people in small business like to see things move along, and the fact that we're still, you know, having to fill out the historic preservation credit forms for our taxes 3 years after the project is completed is a little, you know.
If they were refundable credits, I would be inclined to do another project.
You know, the investors that I work with, I mean, I can, it's Wells Fargo, Bank of America, Berkshire Hathaway.
Raising the cap would appeal to owners of moderate to large businesses, to developers, because it allows for a credit on up to $1 million of rehab expenses. So we expect to see projects anywhere from $100,000 to $2 million occurring in these business districts around the state. It also encourages use of the federal tax credit. States that have robust state tax credit programs have the highest percentage of federal tax credit investment.
Well, the Hotel Clovis was, I think, construction costs were about $8.5, $9 million, almost $10 million. I would say labor is probably half that. We created probably 200 to 250 jobs over an 18-month period. So there's the construction jobs that we're creating. There's the purchasing of supplies.
And you know there's that multiplier effect that contractor is going to buy another piece of equipment from in town or rent something else and he's going to spend more money.
State of New Mexico needs all the economic development it could get.
Banks get very interested, like in Las Vegas with the Castaneda project. You know, there's this huge catalytic effect.
People will come here and there'll be new dollars, new money. We don't just recycle what we have, we bring in new money in.
I think these historic buildings do lend a big economic boost to tourism. And if you can get some cyclists to, stop at restored buildings, they're going to spend some money. They're going to stay an extra 8 hours in Albuquerque and, hopefully provide some boost.
I've done 15 or 18 remodels, almost all of them historic. And that kind of activity just encourages other people.
I think everybody's just waiting for that spark. And I think the Castaneda Hotel being purchased by Allen Effelt, the other building I believe the Baccarat building being purchased and now being owned, everybody, it's coming together. The tax credits allow us the ability to actually do it.
I'm proud of the work that we did, and I would do it all over again.
To us, it's not just having a steakhouse, it's having that cultural property that is so intimately connected with northern New Mexico and with this traditional New Mexican village. That's where we want it to be.
In my opinion, it's the more rural areas that really have some gems of buildings that need to be saved and restored. And we're trying to figure out ways that we can do that.
The hardship is getting money to get the building open, to get the business going. That's the hardship.
I think that the key for developers is to be able to pinpoint early on and be able to rely on funding sources before you can tackle buildings like the Hotel Clovis historic structures. If the refundability and the increased amount of the state tax credit would be a huge incentive for me to especially go after some of the buildings.
Adding refundability enables somebody to do a project and actually use the tax credit, or actually have the tax credit provide cash that goes right into the project. It's economic development. Rehabilitating those buildings is not just a warm and fuzzy concept.